In this deep dive insider learning, I want to share with you one method where many investors don't even know about or don't even think about, yet it's a great opportunity right in front of you. What I'm discussing here is product switches. So a product switch is not necessarily refinancing. So you've got a property, it has finance on it, and that finance is coming to an end. Let's say it's a fixed rate that's coming to an end, or it's a tracker rate that's coming to an end. And what you want to do is you want to now look for new financing. The mistake that many people make is they will always be looking at refinancing. But refinancing, my point of view, is only worth really doing if there's a capital raise in your property, because you'll get some more funds, right? Which you can invest back into property. However, what do you do if there isn't any further raise in that capital? Or let's say you don't want to raise any further finance because you've built a portfolio and you're happy with what you got. Because remember, this can be a race. You can take it to the level of the nth degree where you're taking on the world, or it could be a nice little capital income in the background for you, and that can be property for you. It depends on what you want to achieve, right? So this works for both. Let's discuss what a product switch actually is. So with a product switch, what that means is when you're refinancing, you're not going to another lender, it's the same lender. And the advantages of the product switch is, as it says, it's a product switch. So your current lender will actually say, here are a number of products, which one is the best one for you? And you choose the suite of products and you choose the right one for you. And that is it. And it's a very quick exercise. You can do this typically on the phone. Your mortgage broker can do this for you as well. You can write into them and get it done. And the time frame is anywhere between a day to a month, really, very fast. And the fees, in terms of your fees that you're paying them, typically in most cases, it's nothing. They'll just do that for you and you'll be switched onto a new product. Sometimes there's a couple of £100. Some limited companies, they will actually use a third-party solicitor. So there's a few £100 to pay there. But like I say, in 80% of the cases on the ones that we do, what you find is you end up not really having to pay anything, and the product switch happens really fast. Now, this works for those two scenarios. I hope you're enjoying these insights. Now, I'd love to hear your comments as well. You can click on that bell icon, get the latest notifications. Even I've worked out where that one is. And you can also subscribe to the channel. I'm doing a number of videos like this, informative, to help you to move forward in your property journey. The first scenario is if you are in a scenario where you're a mature investor. So you've built up a portfolio and you don't really want to borrow any more money. You're happy to keep those loan to values lower. So you're happy with that loan to value, and for that reason, you're happy just to switch the product. Or let's say you've already refinanced and the value of that property now has stabilized. So you need a bit more time for that property to grow in that particular area. And it doesn't really make any sense to actually go into another remortgage. If you're like us, you jump into a product where you don't really need to do the whole refinancing, another admin fee, etc. because you understand that property is going to increase in value in a number of years, so you look at another refinance later. Product switches work extremely well. Have a look at them, discuss them with your mortgage brokers.